Why technical analysis is useful for investor, and why as an investor we should be learning technical analysis to compound our money in stock market. That is what we are going to discuss and go deep dive into this session, so that all your doubts in terms of why we use technical analysis, what is in there, what are different chart patterns, how to use it, how to make money out of it, and how to use it like a powerful tool in your investing journey is what I'm going to cover in this particular session. So if all of you are ready for deep diving into this session, just type ready in the comment box and let's begin deep dive into this. What we are going to cover in this session is essentially all these things. We will learn about building blocks of technical analysis. We are going to learn about types of charts, which are different charts, and how to use it and what is the thought process behind each of these charts. We'll also learn about support, resistance, indicators, Dow theory, and we will also learn about price action and how to find emerging sectors for your investing journey. And in the session, I'll also be giving you the gift of the PPT which I'm going to cover, so that you can revise all the concepts later and you can actually make most of this entire session. So let's begin this journey. Let's go for it. Awesome. Now let's think about how as an investor we make money. Now we make money only by two parts, right? There is entry price and the exit price. Suppose we have entered at 100 rupees and we are exiting at 1000 rupees. That means we have made 10x profit in our journey. Now what are the components of these returns and how does these returns get calculated, right? That is what we are going to deep dive now. A standard disclaimer of SEBI. All these illustrations are not recommendations, so please make sure you do your homework. Now this is what is the building block. If you want to think about investing returns, always think about entry price and exit price. And what does these two components ultimately boil down to? The first principles. Now, agar soche to there are only two things which affects the stock prices. One is the business performance, like what was the profit that company was doing per share when we bought the shares, and what was the profit that company is doing when we have sold the shares. Meaning, say we entered at a 10 rupees earnings per share, which is profit per share, and then we exited at 50 rupees earnings per share, which means the business performance increased by 5 times during the holding period of our share. And then right side is sentiment. When you bought, you might have bought at 10p, which is 10 times of the profit you paid to buy that share. And when you sold that share, probably there was a lot of euphoria in the market, people were excited, and you made probably more money while selling. That could be possible, right? Say for example, you got 20p while you have exited, and that is what makes your investing return. So fundamental analysis, very important to learn. I've covered that in our video also. Deep dive we have gone. And that is where, we are getting a lot of requests that why not we also do a session on technical analysis. So I've done a video on fundamentals. You can just type fundamental analysis, Vivek Mashrani. We have got an amazing Excel template which you can go through. And today we are going to focus on technical analysis and why it is important, right? So the right side of it, the market supply, the demand and supply, the psychology of the market is what is very, very important when it comes to your investing journey, right? So we'll learn about how your money can compound by blending the forces of technicals and fundamentals. Now, what all are the building blocks and how does it connect the dots for us? Okay, let's go one by one and try to understand that. Now, first of all, let's try to understand the types of chart, like what are even these charts mean, right? And what is the time frame to use? What is the scale to use? Very, very confusing. So let me break down that for you first, and let me show you how does that part work. Okay, so let's first share the screen and let's go to the chart. Okay, hope all of you are able to see the chart. Now first let's take any company. For that matter, let's take the same company which is on our screen, and I'll be giving you an example of this later on. Let's say we first understand line chart. Now line chart is a very, very simple thing. It connects the prices of a company over a period of time. Now you might say, Vivek, is it opening price, closing price, during the day? What is this price all about? Because every single second when we are trading in the market, we see that price fluctuates. So the line chart is essentially a closing price of the company, which essentially says that, over a period of time, how the company has moved, and how it is the trajectory. But it is a incomplete information. It's like, you say I went from Delhi to Bombay, but you might have gone from Delhi to Agra and then Bombay, or directly gone to Delhi to Bombay. Okay, so it doesn't give you what happened in between during that period when that price was fluctuating. And that is where you have a powerful pattern which is called candlesticks. Now candlesticks, in a very, very simple way, let me just explain to you right away over here, is like this. Okay, this is like a candle, and if it is green in color, it means this is your opening price. Say the price opened at 100 rupees, and during the day it traveled, and suppose it went even higher. Okay, and it went all the way around to 130 rupees. Okay, and then it closed somewhere around 120 rupees. So this will be your closing price, this will be your opening price, this will be the day highs, and we are assuming it never went below 100. So this will also be your day low. So that is how this green candle works, right? So let's take a live example, practical example, to understand this particular candle, right? So let's understand this candle, how it got started. So if we see, the starting point was 3043, and then during the day it went up, and the closing was 3668, and it hardly had any wick, which means the closing was almost at the day high, which means a lot of strength, right? It's like, fighting. You might have seen karate or judo, or all these kusti which is there on the Maidan, right? Or the tug of war, where people are pulling that rope and seeing which side it is going. Now imagine a green candle without a wick is like a one-way tug of war, right? Where all the bulls were so heavy that they were able to pull, the side of the green. Okay, there was no selling, there was nothing that happened, and during the day it like really went crazy on one way. So if this is clear, like what is the purpose of line chart versus candlestick chart, just type super clear in the comment box, right? So keep it simple. It is just like a representation of four prices, essentially your opening, closing, high and low of the day. That is as simple as it can go. Okay, now how to read these charts, or how to interpret these charts and how to go about it. So these charts are very, very important to understand the thought process of investors, or thought process or psychology of investors, and we can pretty much use these charts into three time frames. Okay, generally we use three time frames. There are multiple time frames. Again, I'll share it to you what are different time frames that is there. First, we can use daily chart. Okay, daily chart is where each of these candles represent one day. So what happened on Monday, one candle will get formed. What happened on Tuesday, one candle will represent that. What happened on Wednesday, there is one candle that represents that. Okay, so it's like your daily schedule. Then W is your weekly schedule, where from Monday to Friday what happened. It's like in your office also you might have seen. You have a weekend schedule, you have a daily schedule, you have a monthly output, right? So you need to basically think about the entire week when you are thinking about one candle. And when you do a monthly candle, which means each of these candle represents 1 month, right? So what happened from the first date of the month to the last date. Now if you are looking right now, say 13 June, then the latest candle would mean 13 June to 13th May. Okay, so 1 month from that particular date. So it's like a rolling basis actually. So are you all clear what are the different time frames? Now as an investors, we generally prefer weekly and monthly time frame. Daily is there for confirmation, but generally as an investor we prefer weekly and monthly time frame, and that gives lot of edge to us versus other investors who go around very tiny time frame. So generally traders look at daily or a 15 minutes chart, or people even look at a 1 minute chart where one candle is like what happened in 1 minute. But as an investor, we want to do it peacefully. And there is a video which I did a deep dive, like how to think about these patterns. I do core where I use mostly monthly, I do satellite where I use mostly weekly, and then interpret all these things. Now, along with price, so we only talked about the chart where the price movement is happening. Along with price, there is a very important component which gives you signal around what is happening in the market. Can anybody tell me what is that other missing piece which is very powerful, which is very insightful, and if you understand that along with price in a simple way, it can completely change your life. What is that another component? Just type in the comment box. Let me see how many of you are able to spot it and guess it. Awesome. So yeah, we have got couple of right answers on the screen. The second component, which is very powerful, is volumes, right? So the second component is volume. So let's understand what is price and what is volume. I'll share the screen again. So price is, on a particular day, let's take this chart, on a particular day, how much it moved. Okay, so it's like the force in terms of the displacement, right? If you think in terms of physics, I recently watched this series called Physics Wala, really loved it. And I was amazed how physics and investing also connects. So, it's like a displacement, the movement that has happened is the price, right? So from 100 to 120 it has moved, that is the price displacement. But to displace that price, how many investors were contributing to it? That is very important, and that is what is the volume, which is the number of transactions on that particular day or week or month, whatever time frame you are using. If you combine both these insights, it gives you idea around one very powerful keyword, which is, can anybody tell me what does combination of price and volume, say on the upper side, give an idea about in the market? What is that one word which is very important when you are taking your investing decision? The answer, my friend, is demand. Okay, so essentially technical analysis is nothing but study of demand and supply created by the psychology of the investors based on the information which is on the ground, the fundamentals that are changing. It could be companies fundamental, it could be macro fundamental, it could be global fundamental, it could be just speculation, or it could be just somebody pumping the price. Whatever are the factors, all the factor combined, what it creates is demand and supply, and that demand and supply is reflected on the charts, or the price and the volume. So everything what you learn in technical analysis is actually nothing but when you are doing a transaction, the price moves up or down, and there are number of transactions that happens. It basically captures price and volume, and essentially it gives you an idea about demand and supply. Okay, so if all of you are super clear around this, if your concept of technical analysis is super clear, just type super clear in the comment box. Now when there is demand, okay, when there is demand, what happens? When there is demand, what happens? People either buy shares more and more. When there is supply, people sell shares. Okay, so there is some kind of move that gets created in the stock prices. And just like physics, as I said, I just watch Physics Wala, and there is a concept of law of inertia which he explains, right? Something which is moving will tend to remain to be moving, or it will remain in momentum. Something which is sitting, if you are idle, if you are procrastinating, अभी आप सोच रहे हो कि यार ये क्या करे, वीडियो पूरा देखे कि नहीं, gift मिल जाए जल्दी, then I'll watch it later. That is called inertia, where somebody is like just not in a mood to move, and it will remain like that. And because of that, there are three trends which gets created. Okay, so either there is a, all the investors are bullish, and they keep buying, and they want more of the shares, so they keep on buying, give me more. and until there is a brake which gets applied, the engine keeps rolling, the train keeps moving, right? So even in train you might have seen it slowly changes, the direction. It's not like suddenly the train will just stop. So even if train is running very fast, slowly it will come to the halt. The same way, the uptrend generally continues to happen. Then once there is a break, which is called distribution, where demand matches broadly supply, there is an equilibrium, and there is something called as, what is called, sideways market movement, right? So you have sideways market movement, and then you have downtrend. Okay, so this is what is a concept of trend line. Essentially, it moves like in a waves, how it is shown in the slide, and you can connect all the dots below, and you can actually draw a trend line that, hey, my prices are moving up, so it is a upward moving trend line or a uptrend. And when the prices moved sideways, it is called sideways trend line. And then you have downtrend, which is where the price is moving downwards. So if this is clear so far, if you are all clear around three trends which are occurring again and again in the markets, just type super clear in the comment box. So now tell me, in the daily chart we are in, and we are seeing this move. What is this? Whether it is a uptrend or a downtrend or a sideways move, what is this? What we are seeing right now in the front of screen? Type in the comment box if you are clear around it. Whether it is uptrend, whether it is sideways, or whether it is a downtrend. It's a uptrend. Okay. So this is how powerful technicals is. Once you learn the building blocks, you can literally real time apply into the markets. Now the trend could be different in different time frames, right? So if a company is on a uptrend on a daily chart, on a broader basis, it could also be in a sideways. Okay, so based on the time frame, it kind of keeps changing. Like right now in the monthly also it is an uptrend, but imagine there was a big fall and then the price started shooting up. Let me get an example like that. Let's take a Divi's Lab. You can see like broadly still on a monthly chart we are into the consolidation band. It is like not a fully confirmed uptrend, but in a weekly chart you can see like it is still broadly trying to go up, and daily chart you will see that it has started going into the uptrend, right? So that ways, based on what kind of time frame you are checking, the overall analysis also changes. Like say HL, this is broadly on weekly time frame, it is on uptrend, right? So this is how you check it. All of you clear so far? Is it making sense? Easy? Yes, because I've seen people make technical analysis super complicated, and actually it is not like that. It is very, very easy, very, very simple to understand. Now the next concept we will learn is concept of support and resistance, and then we will also learn concept of Dow theory, how it works. But support and resistance kind of captures the market psychology. It's just like understanding the demand and supply of the things, and where this supply is concentrated, where this demand is concentrated. And we'll learn that in a very, very simple way with a very powerful examples and all those things. So let's go around this and let's try to decipher. Okay. So this is like something called as Dow theory, which is like very simple actually. What Dow said is, hey, price moves on a wave kind of formation upwards when it is an uptrend, and it goes wave kind of form downwards. So when it kind of goes down, the tops are lower and lower, which is like kind of very simple, but I don't know how the theory is made around it. But when it falls, you have more and more lower bottom, and when it rises, you have higher and higher tops. Meaning, I'll just share it in the slide how it looks like, right? So meaning, if I'm going up, let me just redraw it. So if I'm going up, basically what happens is my highs, which are these tops, will be higher and higher compared to the previous top, right? So each top will be higher than the previous one, it will be higher than the previous one, it will be higher than the previous one, and so on and so forth. And if it is going down, let's take an example of, let's take a long-term downtrend. Let's take this example, right? So if it is going down, it needs to form a lower and lower tops. Okay, so lower tops and lower bottoms, which is kind of very, very intuitive. And when it changes the trend starts going upwards. Okay, so that is as simple as it can go, right? So that is what Dow Baba said, nothing too complicated. That okay, if it needs to go up, it needs to make newer and newer high. If it needs to go down, it will make newer and newer lows, which is kind of very simple. So there is no point in going too deeper into it, but hope you got the concept. But it is very important validation when the trend actually changes. Now here I'll just move my video here so that all of you can see. Now how many of you are ready to listen to the story of monkey? Okay, this I've shared in my community also, where we have discussed this example, and like our members literally loved it. This is like a simplest way you can actually understand the concept of support and resistance and the psychology around the entire investing. By the way, if you have not downloaded this presentation, okay, I'll just give you the link of this presentation which I'm sharing with you. All of you can download this technofunda.co/technical. It is there in the description also. If you don't, if you are not able to find it, just note down this URL in your, web and just browse it. You will be able to download the presentation. Okay. So, are you all ready for the monkey story? Just type BIO. BIO is bring it on. Okay. So, and today we are going to deep dive discussion on all the basic concepts so that it's super clear for all of you. Okay. And we are also going to learn patterns. We are also going to learn indicators after this. And by the way, there are a lot of other things which we have done on this channel. So recently we had a budgeting session, which you can go through. If you want to learn how to do SIP and get a template of 20 stocks SIP portfolio strategy, you can go and check like SIP portfolio Vivek Mashrani. You will get an idea about that. If you want to understand how to invest in mutual fund in a smart way, we have done a video around it. And of course, if you want to learn how to pick up strong stocks in your investing journey, we also covered that. So a lot of videos which I have covered, and you can go through, check it out, and go deeper into your investing journey. Now let's take this example of bandar. Okay. So first, let's say that there are three bandar. Gandhi ji ke three bandar. It is like my favorite example which I keep giving. The first bandar is somebody who is a long bandar as in bullish bandar. Okay, and the bullish bandar, assume that he entered any price. Okay, say he entered at 100 rupees, and there is a shorter which is like kind of he wants to short at any position. And third bandar is undecided, which doesn't know like whether I want to buy or sell. Now imagine, slowly the price goes up. Okay, the price starts going up, and there is something called as change in the price. Right? So now the long will be happy that my price is going higher and higher and higher, and at the same time he feels like boss thoda niche aaya hota to le leta main. Right, so he thinks like थोड़ा नीचे आ जाता और ले लेना चाहिए था ना, अभी तो opportunity miss हो गया, but at least he is happy that okay, I'm making some money. Now short, what he thinks, short says boss फंस गए, right, ये तो गलत decision हो गया, I thought it will go down, but the price is actually going up. So what this guy will do, this guy will regret, but at the same time he will be hoping that boss सेम प्राइस पे दिलवा दो, मैं ब्रेक इवन पे नो प्रॉफिट नो लॉस पे निकल जाऊंगा. राइट, दैट इज व्हाट इज द साइकोलॉजी ऑफ सेकंड बंदर. द थर्ड बंदर इज अनकमिटेड, बट देयर इज अ फोमो. बॉस भाई ये ले लेना चाहिए था, इट वाज अ गुड बाइंग अपॉर्चुनिटी, बट वेन एवर नेक्स्ट टाइम वापस 100 रुपए पे आ गया, आई विल एंटर. ओके, सो आर यू ऑल एबल टू अंडरस्टैंड द माइंडसेट ऑफ ऑल दीज थ्री monkeys? Right, what is the long monkey thinking, what is the short monkey thinking, and what is the uncommitted monkey thinking? Now what happens? Suddenly the price starts going down. So now this long is waiting to add more because he thought कि भाई opportunity miss हो गया था. So beyond the point, when it comes, he will buy more. Okay, now it is a good opportunity. And then short is like breaking even. So it will cut off all the short positions. So again, when you cut the short, you need to buy shares to net it off. So that buying will also come. And this uncommitted will also start buying. And that level will kind of become the support level, which is there in the bottom of our slide. Okay. Now, what happens is, if these levels where there is a shift or the turn that has happened in the overall market, investors tend to remember it. There is a psychology behind it, and people remember those levels that, oh, 100 rupees pe turn ho gaya tha. And if it again comes to 100, people think that there is a higher chance of this to happen again. Okay, so it's like a confirmation bias. And I've covered all the biases of investors also in the video just a few days back, like 7 traps which people as an investor think. So now what happens is, again, when that price comes, investors who want to sell, they wait for that price to again get negated. Buyer who wants to buy, they will wait for that price to cross, because then they will get more bullish, and so on and so forth. And that is, in a simple sense, is support and resistance, a psychological level where the prices have changed, whether on the downward side or upward side. If there is a ceiling and the ball hits here and comes back down, this is called resistance. Okay, so this is like your resistance where price starts moving down. Again, second time, if it moves down, market thinks that, this is more powerful. Now this is happening again. If this is third time again it happens, it is even more powerful. So the more number of times there is a ceiling that hits, the more powerful is this resistance. Okay, it's like a solid wall. And the more times it bounces from here, again bounce from here, again bounces from here, this is your support. And the more number of times the prices bounce from there, the stronger is the support. Simple, nothing complicated. And this one simple concept, guys, can make you a lot of money, along with the patterns which I'm going to explain after this, right? So if you follow both these in combination, you can actually literally make a lot of money with these simple things. Actually, investing is simple. It is not so complicated. People make it complicated. Okay, so if you use simple tools, price action and all these, it can go really, really powerful. Now, in my investing journey, what I do is I like to combine two things, right? So first, I want to see price volume action, and this is more for satellite portfolio. Core, there is a different approach, and over a period of time, I've explained in other videos. Are you all ready to understand how to spot these opportunities and which sectors to focus on, and then how to use these patterns to maximize your probability of return? If you are all ready for this, just hit a thumbs up so that I know that you are ready for this particular part of this session. Okay, so let's go deeper. Let me see how many of you are ready for this. Awesome. Great. So let's go here and let's try to understand how I see price volume action. So first, there is a screen, okay, which I use. This tool is called ridewinners.com, and every day it gives me, stocks where there is a spike in the price and spike in the volume. Say for example, today, as we speak, there are a lot of these defense stocks where you had price and volume action. So if you see over here, there is a spike in the price, there is a spike in the volume. Okay, here there was a spike in the price, spike in the volume. So all these things get captured here, and this continues for a period of time. So there is a trend that gets generated, that okay, every day if there is some movement, it will show a trend that okay, every day there is a spike in the price and spike in the volume. So this is like the first thing. But more than that, I have a sectoral screen, okay, where if there is a majority of the companies in that sector, like say there are 24 sugar companies, today as we speak, as we record the video, there are 70% of these companies which shooted up with price and volume action. Now the most interesting thing is, you can see the jump in terms of percentage. So from 12 it was 45 and 45, here from 0 it was 33 and it was 66 yesterday itself. So all the defense stock actually started giving signal 2 days back, and today it actually blasted. So you can see like Mazdok and GRSE both blasted like crazy, and Musdoc and GRSC were like up many percentage. But the signals were generated even before that, right? So the signals gets generated slightly in advance. You can see it was already on 12th and 11th June. From zero it shifted to a higher percentage. Same way if you see sugar stocks, it will show you like all these sugar stocks from 2-3 days it was generating the signal. So all these greens are the signals. Okay, and a lot of these companies made a new high also. So this is how we use power of price volume action combined with sector insights, and then we can analyze the sector in a deeper way fundamentally. And that is what we have been doing like multiple times. If you are following me or you are following our channel, I think when people were not talking about railway and defense stocks in 2022, we found the price volume action in railways, and then everything else is history. A lot of stocks have gone 2x, 3x, 5x, 10x also. And same with defense, we did a live video like this in August 2022. You can go and watch it. Just type defense sector Vivek Mashrani and you will see that the same process I used and what was the result. Okay. By the way, latest one, I want to show it to you. Is, say for example, support resistance example, right? So generally for longer term time frame, you can use weekly or monthly time frame. So if it is a satellite stock, which means you want to do positional investing into that, you can even use weekly chart. So let me share the screen and let me show you like how I analyzed Dixon using the same principle. So if you see, Dixon was moving up. It was into like motion, right? The train example which we discussed. So it was like in a very fast moving uptrend. Okay, there was no stopping. It was into that momentum, and suddenly at this price it got hit. Okay, and the brake started applying. Then it did not go down immediately. Again, it tried to go up. Again at the same time there was a resistance. So that wall hit. Okay, and it was not able to move up. And then the direction changed. So these 2 points are very important resistance point, right? At which the train actually stopped. It was not able to move forward. And then it changed the direction. Now again same thing happened here. Okay, so it bounced from here. It again stopped the downtrend. Again one more time it hit there and then went slightly more higher. And 2 times it tries to cross this price, again move down. So this is again one more resistance. Further, multiple times it tried to bounce back from here. This again created a strong support zone. And then one more time, remember the same price at which it was not able to go up, the same price it kind of got resisted. This is again a very strong resistance. One more time it tried and finally it was able to break through this resistance. And same way, one more time it also tested this resistance. Okay, so that is how you analyze that. Okay, now my all previous resistances are done, even this resistance is done. So now when I'm going into a new high, there is no resistance at all. And by the way, when the price crosses this resistance, there is a rule of polarity, which means your previous resistance becomes your support. Okay, it's like your Amitabh Bachchan and Dharmendra in Sholay. So if there is a katti, then if you patch it up, now there is a friendship and you help each other. Okay, like that Dharmendra and Hema Malini, when they were fighting initially, right? So initially she was like a resistance. Okay, whatever Dharmendra was doing, she was opposing it. But once they started journey together, once she fell in love with Dharmendra, now she became like a support and even saved in front of Gabbar. Okay, so that is how it works. It's a change in polarity. So now resistance has become our friend because the price has already crossed it, and now it has become support. So you can see that the price exactly bounced from that same zone and then again started moving up. This is how you interpret support and resistance, and along with patterns it becomes really powerful. Like in our research firm, what we did was we spotted at the same location, you can see like the same sub resistance. When it crossed, we understood that there is a lot of demand, of course along with the price volume action. So you can see that there was a lot of positive price volume action When it was going up, the volumes were much higher. When it was going down, the volumes were much lesser. And we pretty much spotted it at something like 5950. And today as we speak, live inside this video, it is already 10,800. So essentially it has almost doubled in less than 5 months by using a simple technique of support and resistance along with the patterns. And then for exit, we use an indicator called Shaktiman. Only when it becomes red like this. So if it becomes red like this, only then we exit. But as far as it is green, we keep riding it. So this is how you ride winners with your technicals. And you also can take exit decisions when the things are not going in your favor. So in this zone, I would have exited for this entire period. And wherever it is green, you can actually keep riding it. Even if you have entered here when there is a turnaround and there is a price volume action, you can keep riding it. So this is how, as an investor, it helps you. And we also analyze the fundamental side of the things, that if a sector or a company is coming, we also analyze what is the revenue potential, how is the result, what they are doing, what is the strategic direction. So we combine both technicals and fundamentals to take our decision. So if this is clear so far, just type clear so that we can move to the patterns and indicators. If you are all ready for this, just type ready in the comment box. So this is again a very, very critical part where you can use patterns which repeat. So just like the resistance and support zones are embedded in the psychology of the investor, when they take decision around selling a stock or where there is a slow accumulation happening, it creates patterns. And the best part about these patterns and the best part about these technical analysis is that it happens again and again. So it's like, your cards when you play, it occurs frequently, right? So you have 7, 8, 9, 5, 6, 7, 8, 9, and a lot of these patterns actually repeat again and again. And that is how it also works in technical analysis, that some of these patterns actually repeats. And if you are able to understand and gauge these patterns, you can take advantage of them again and again and again and again. And I'll show you some of the live patterns in some of the stocks that is happening. Again, these will not be a recommendation, but just for learning purpose, that real time you can actually spot these patterns and take advantage of it. Okay. So are you all ready for this? Let me show you a couple of patterns and see how it works. So here is the pattern side of the things. This we again discuss, like there is an accumulation which is happening, and then there is a distribution. Again, we'll not go deeper into it, but here is where the pattern comes into the play. Let me move my side here. Now the most prominent pattern is called cup and handle pattern, which is like, there is a downtrend where all the weak hands are going out. Slowly the price is attractive enough and there is a accumulation, all the smart investors go up. Then there is some bit of profit booking that weak hands do, and then it literally bounces because there is no supply. Okay, and I'll show you live how to interpret it and how to think about all these patterns, right? So let me share the screen and let me show you a couple of charts where you can see this live. Okay, so let me take a recent example. Let me go to my list. So let me go to the June list, which last week I was analyzing. Let's see if we can get some ideas from there. By the way, if you are liking and enjoying this content so far, just hit a like button, just subscribe to the channel so that you can take advantage of it in the future also, right? So in fact, the Dixon technology was one of that example, but anyways, I'll cover some more example in front of you. So say Aurobindo Pharma. Now I'll remove all these things so that you can understand. So this is like a classic cup pattern with a very small handle. So you can see like this formed a cup and there was a bit of handle and then boom. And this was your, what was this line? What is this? Can you all tell me what is this? Is it support or resistance over here, and over here? Whether it was a support or resistance? This was resistance, right? So it tried 2 times to bounce beyond it. It was not able to go down. The trend change. What is this trend? Whether it is downtrend, sideways or uptrend? This trend, just type in the comment box. This is your downtrend. Okay. And then slowly the accumulation happened and it started going into the uptrend. Okay. So this is how you can actually think about this cup pattern. So overall it has formed a cup and small handle, but technically it is like a cup. There's a small handle which is not very significant, but this is like how the cup pattern happened. So each company, when it goes through downtrend, there is a good valuation available, and then all the value investors starts buying, they start accumulating, and things also become better. Because of that reason, the pattern happens again and again. And with our indicator, we have been able to, like ride it very, very smoothly. Like entire downtrend, it becomes red, so we pretty much avoid it. And as soon as it starts becoming green, we can actually accumulate and spot it. Like recently, there is a company called as VMart, where there is live this thing has happened. Okay, so it is not in hindsight. A lot of time people think technical analysis is hindsight and all these things. Actually, the same thing happened in a company called VMart, and we have actually published a research report at this zone where it has just crossed the resistance and the direction has changed. So from downtrend, it has started going to uptrend. Okay, so this is how we have actually connected the dots, and live we have actually spotted it. One more live example if you want to see is example of Divi's Lab, right? So Divi's Lab went into a very big downtrend, then it stabilized, and now if you can see, it is actually forming a cup kind of pattern, and hopefully it will finish this pattern. Okay, so this is like where it is actually forming. So are you all able to gauge it? There is one more Shilpa Medicare, which is again forming like a cup kind of pattern. Okay, same way if you see, this company is already forming and it has just crossed. Okay, so this happens again and again, and like for our premium members, we actually discuss a lot of these patterns on a weekly basis, and we find out which are these bases which has occurred again in this journey. So this is what is the power of understanding the patterns, because it repeats. Very simple, it repeats, and if you know something is repeatable, you can take advantage of it. And finally, there are a lot of indicators. So the one which I showed was my own proprietary indicator, which is called Shaktiman. But there are a lot of simple indicators like moving average, which just does the averages of all the prices. It could be a simple average or exponential average and so on and so forth. But technically, all the indicators are derivative of price and volume. So there is some kind of combination between price and volume which kind of creates these indicators. And if you want to see in TradingView where to see these indicators, you can actually go to the indicator section, and there are lot of indicators. Okay, you can keep searching. So there is something called as exponential moving average, there is something called as relative strength. Okay, there is something called as ADX, there is something called as MACD. Okay, so there are a lot of these different indicators, but essentially it is combination of only majorly two things, price and volume, and basically there are different equations which are created around it. Moving averages, indicators helps you in your exit strategy. It helps you in having a disciplined approach in terms of being objective inside your investing journey, and it also helps you to see like broadly where the trend is going. Okay, so that is all for this video. Hope you enjoyed the video, and if you have not downloaded the PPT, I'll share it again. And if you want to learn more about TechnoFunda Investing, how to grow, you can pick up this book of You Can Compound. It's Amazon bestseller. If you want to learn more on personal finance, you can pick this copy of the book of Action, which is acronym of 100 Personal Finance Principle. And yes, if you want to join my free masterclass, if you want to be part of my community, go to technofunda.co/webinar. We selectively choose people who can be part of our community and grow together. So if you qualify, if you are really right fit, you can also get opportunity around it. And today's presentation, if you want to download, you can go ahead and go to this link, technofunda.co/technical, and you can download this PPT which I shared with all of you. Okay, so that's it for today. It was a 45 minutes masterclass. Hope you enjoyed it. Hope you learned something new. Hope you were able to connect dots. and most importantly, you learned that it's a very, very powerful tool to be used in your investing journey. As a long-term investor, you can pretty much use this tool, and along with fundamentals, it really becomes crazy. And that is what I do. I blend technicals and fundamentals and try to make sense of it, and use it for my compounding journey and help others to compound. That's it from my end. Thank you so much for joining me on this live session, and those who are watching the recording, make sure you implement what you have learned and not just stop at this learning point. Thank you so much again. Keep compounding, guys, and wish you all the best in your investing journey.